Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Bitcoin soars close to 90,000 and then pulls back as tech markets show signs of fatigue. We discuss where next for the Trump rally. Meanwhile, Tesla takes a breather after a 40% surge since the election. Are the Elon Inc. investments overdone? And fundamentals in focus as we dig into earnings with Shopify president among the executives joining the show. But first, we just check in on what perhaps is a slight pullback after what has been a phenomenal rally across tech companies and indeed across crypto. We're down just by about 0.1% on the Nasdaq 100. Nvidia still on the higher side. Tesla drags us down from a points perspective after a real rapid run up since the election results on Wednesday. I'm looking at what's happening in the world of crypto, up by 1.5%. At one point, this number was so close to $90,000, in excess of 89,000. We draw back somewhat after we see technical signs of overbought, if you're looking at the RSI. But overall, we're also just seeing maybe a pause in the realities that have been a more than 100% jump in Bitcoin so far this year and a more than $3 trillion market capitalization of the ecosystem in and of itself when you're looking at digital assets. Shonali Basak is here for more. And boy, have we come far, and maybe just a bit of a pause here.
A bit of a pause. To your point, that $90,000 level is one to watch. I would say, Caroline, what is incredible is even those in the crypto community watched what was happening this week with awe because it was such a stunning rise just yesterday alone. And you have to remember, since before the election, Bitcoin was trading at under $70,000. And so that rise to almost $90,000, if you bought one Bitcoin the day before the election, you're almost $20,000 richer for it. And you're seeing crypto-linked stocks also take a breather. But Coinbase, for example, take just their 8-day gain. It is 75%. So the run-up you've seen is just tremendous. And you have to also take in note how much news there still is to come. Typically, in a new administration, you would see an SEC chair, for example, step down quite swiftly. We don't know how Gary Gensler is going to behave in this scenario, but any new SEC chief under a Trump administration would really be very telling for the direction of the industry. There are laws that are waiting to be passed when it comes to stablecoin. There are questions about whether there will be a play out of the promise of a strategic Bitcoin reserve. And later today, we'll be talking to Marathon as well, and we'll talk a little bit about that mining promise, this kind of made in America crypto story and how possible that is and how quickly that could ramp up.
As and when it becomes the crypto capital, the United States at least. That's the promise. Shonali, there are people, though, in the meantime making a whole lot of money. You just mentioned about how much you'd be up if you'd been long Bitcoin, but talk us through some of the billionaires doing well.
Yeah, think about Mike Novogratz alone, for example, and he is a few $1 billion richer just off the most recent rally. And it really is just wealth simply tied to crypto. The Winklevi as well, the Winklevoss twins, of course, have had a tremendous comeback story. And you think about not just the most recent comeback and how much they've gained in the most recent rally, but where they were just a couple of years before. The CEO of Binance as well, remember, he had retained his stake in the cryptocurrency exchange. And when we think about this as well, how are they making money? It's not just their holdings in Bitcoin, but of course the enterprises that they oversee and the variety of assets they hold in the crypto community. You are seeing here now not just the surge you've seen in Bitcoin alone, but things like Solana and Dogecoin, and then the exchanges, as we've talked about, that are owned by the likes of CZ when it comes to Binance. And Coinbase alone, and Brian Armstrong, a billionaire as well.
Shonali Basak, you're going to want to hear more from her and her show, Bloomberg Crypto, 12 p.m. Eastern today. So appreciate you joining. Meanwhile, let's get to what it means for the rest of the markets. Joe Zhao's with us. He's managing partner at Millennia Capital, a tech fund focused on VC and growth equity investments. And Joe, we come to you not only because of your expertise in the world of venture capital, but also the former hat you used to wear in monetary policy making over at the Federal Reserve. Many now wondering, if these markets have rallied too far, particularly if you think about inflationary pressures coming, what do you think is going on over at the Fed right now?
Look, let's start from the top. So I think the next 2 years are going to be really, really good for investments. So let's start with monetary policy. There's an easing cycle, not only in the US, but globally. So capital is flowing back into financial markets, equity markets, and that will take kind of a year to materialize.
But the easing cycle will continue even with tariffs and the promises of that?
Because once the ship starts pivoting, it just doesn't stop overnight. And even if, let's say, we thought the terminal rate was going to be 2.5, maybe now with tariffs and other stuff, maybe they'll end it at 3%. That's still going to be a lot easier than today at 5%. And then on the other side, fiscal policies, on the fiscal policy side, you're going to see the administration and the Congress working together to put a lot of I think stimulus into the economy, into the real economy. So when you combine monetary and fiscal, you've got two things working at once, and that's why I'd expect the real economy to grow by 2 to 3% for the next few years. And if you're in tech investing, if you're in markets, you'll probably benefit. So the rally we're seeing, I think, is an early reflection of that. And I don't think this rally's even stopped or paused.
Okay, so who leads us higher? At the moment on the day, NVIDIA still manages to be above water when the rest of the tech market pulls back a bit. Is it still the AI winners that lead the charge?
It has to be because, AI is just the latest thing in tech. And you never want to short innovation, human progress. AI is just the latest wave in innovation. And so we're in the second inning of this AI cycle. That's going to run for 10 to 15 years. And so AI is going to drag, let's say real GDP was going to grow 2% without AI. I think with AI, real GDP will probably grow by 3% approximately CAGR over the coming years. And AI is not only attracting a lot of investments, but it's also going to spin off a lot of applications. We're seeing some of that in venture capital. You see AI in robotics, you see AI in search, AI in healthcare, and AI in AI agents. So in the coming 2 to 5 years, you're going to see a lot of new categories coming out, and with a lot of new products, businesses, and investments, and that's kind of what's going to drive real GDP forward.
So when people question the return on AI, when people are wondering, okay, look, I see the hyperscalers putting ever more money into NVIDIA, but I'm not seeing it impact my life or indeed broaden out, you say just patience?
Two things. One, these things grow like this. It's, we're at that early inflection point. The second thing, which I'll give like a very silly analogy that I've given our partners, and I think our partners love it. Let's say you have a few plants in your house. You're looking at it every single day. You're not growing. You go on vacation for a week, you come back, the plant's gotten twice taller. So I think the naysayers are looking at these things every single day, but what you gotta do as an investor is to take a step back, check on these businesses and your portfolio companies every 3 to 6, 9 months. You'll see that there's actually a lot of progress being made. In our portfolio, in our ecosystem, we're seeing entrepreneurs coming out of incumbents every single day, coming out of some of the companies like Stability, Lambda, and they're building new businesses. It does take 2 to 5 years to really build an enduring business, probably more. So I think we're just being a bit impatient.
I'm looking at your portfolio now. You've got some interesting companies. And let's just take, for example, SpaceX, led by one Elon Musk, who is now very close to the seat of power. How much does that make you feel as ultimately your view on Elon Musk being able to handle all these different roles, these different job titles, whether or not it's an official role in the cabinet or not? Do you still want to be backing the companies that he builds?
Well, look, we're very fortunate to have invested in many companies that are category leaders in AI in various sectors, cloud. And I think on this entrepreneur, and I can't talk too much about it, the one thing that I'll say is, I'm going to use another silly analogy. You don't bet against the greatest entrepreneur of all time before he's even hit his prime. And I think, so I think whether it's this company or other companies, we take a long view. And in fact, post liquidity events for these investments, we distribute stocks to our investors. Asset management firms, family offices, and our capital base is long-term focused. So I think we're going to be holding these stocks for the next 5, 10, 15 years, and we're really betting on what's coming for, down the pipeline.
Do you bet against companies he's taken issue with? Because he's taken issue with OpenAI.
No, I think that again, we're long AI, we're long tech, we're long innovation, we're long the American economy. And I think that, there are some folks I've encountered who are really, really negative on some of these things. And what I'll say is you can short a stock in the short term, but you can't short an economy. If you're short innovation, human spirit, and the real economy, you might not do so well. So sometimes these stocks will come up and down both in public and private markets. But again, as a long-term investor, we're supposed to hold a long view and just be in these companies for 5 to 15 years, and I think we'll do fine.
What about China or other countries that are trying to build tech ecosystems that the US is ultimately potentially going to start pushing against even harder?
Yeah, look, I was in the UK, I was in Dubai, I was in Asia, and I think, we're in a UK-based AI company, we're in one in Israel, and you travel around the world, the US is by far the category leader in this AI race. Everybody else is miles behind. And there's 2, 3, and 4 might not be, are probably very far behind. And I think that this race is only starting. Just I don't see sort of our position being challenged yet. But I think competition is great, right? Because it makes you work harder. But I think if you look at our portfolio, our thesis is we think that this AI boom is going to drag tech earnings and tech growth by a big amount. And that I think in the next 10 years, we're going to look back like how we looked at the internet and be like, why didn't we invest more?
That plant is going to grow a lot over the next 10 years.
Hopefully.
Shows that. It's great to have him here in the studio, managing partner at Millennia Capital. Shopify shares, say that twice, plenty. It's soaring at the moment. Look, we're having the best day since May 2023 after the reported third quarter sales that climbed 26%. This is in a sign that the Canadian e-commerce company is really gaining momentum. Big enterprise clients, European growth, we're going to dig into it with the Shopify president, Harley Finkelstein. Great to have you back on the show, Harley. And just talk to us about the growth trajectory here and how you're seeing a shift, in particular to enterprise clients. Can you talk us through it?
Yeah, absolutely. I mean, it was a great quarter, certainly. GMV was up 24% to $69 billion. Revenue was up 26% to $2.2 billion. And free cash flow margin expanded to 19%. So I think what you're seeing is us grow both the top line, but also the bottom line. And I think the other thing that's, as you sort of point out, which we're really excited about, is that more merchants are coming to Shopify across verticals, across geographies, and even across sizes of merchants. And one area that I'm especially proud of is the headway we're making, bringing the biggest brands on the planet onto Shopify. In fact, this quarter alone, we saw 16 enterprise launches on Shopify. Companies like Hanes and On Running and Off-White and Victoria's Secret are coming to us as well. And so I think we're really substantiating that we're not just an e-commerce company for a domestic type of merchant, but we can handle the largest businesses that want to sell globally.
And as you said, companies that are globally based as well. Europe really shining a light where many would perhaps feel that the European economy might not vindicate that. Tell us about the growth in Germany and France and the like.
Yeah, it's remarkable. I mean, we think about international from two sort of vectors. The first is when you sign up for Shopify, how can we make it really easy to be default global, as opposed to just think about your home country as your total addressable market. On Shopify, using things like managed markets, you can immediately sell everywhere. But the other vector is also merchants that come to Shopify. And if you look at international GMV, that outpaced North America at over 30% year on year in Q3. European specific GMV grew over 35% in Q3 year on year. That was led by UK, Germany, France, and the Netherlands. And if you look at the merchant base itself, international merchants increased by 36% year over year. So we're seeing success, certainly in North America and the English-speaking world, but we're also seeing a lot of success right now in Europe.
A lot of that has been, perhaps you've been enticing these new clients because you, in particular, Harley, have been willing to spend on sales and marketing. How much does that remain a more than $300 million endeavor on a quarter?
Yeah, I mean, the way we think about, first of all, up until very recently, the focus on Shopify was product, and we only started building our go-to-market engine specifically for the enterprise in the last, 2 years or so, and it's really starting to work. And when you combine really good, strong execution on go-to-market with really great marketing, the results speak for themselves. The way that we think about marketing, though, is very scientific. We have very strong guardrails, and 18-month payback is what we look for. And when we see opportunities to spend to get a proper return in a proper, payback period, we spend. And if we don't, we do pull back. But the entire philosophy around marketing is ROI driven. We experiment. If we see results, we double down.
And many singling out the operating margin, 19%, liking that. So sticking to that particular focus. I'm interested in the expansion. Basically, you've always been known as this provider of tools for mom and pop shops. And now clearly it is growing. The enterprise size is growing. The international focus is growing. And also wholesale is growing. What about this B2B element?
It's pretty remarkable. I mean, this all started because of existing merchants on Shopify who are very, very strong in direct-to-consumer, selling direct to the end consumer, began to ask us if we can also help them sell wholesale, sell to on the B2B side of things. And so we started probably about 2.5 years ago, putting together a very compelling product to allow existing merchants to also sell to in a B2B fashion. The end result is that a lot of B2B only exclusive merchants began to come to Shopify, companies like Carrier that are using Shopify to sell industrial heating and cooling, pieces of technology and engines. And the result is that B2B GMV grew over 145% year over year in Q3. That's 5 consecutive quarters of triple-digit B2B GMV growth. And so, you used a great term before. You said, we started as SMB and specific, but now we're also seeing a lot of success around B2B international, as we talked about, but also offline. We are now powering many more large, complex, multi-location merchants. In fact, offline GMV was up 27% year on year. And what you're seeing when you sort of bring this all together is we are creating this unified single retail operating system so that large brands and small brands can come to us and sell across every single surface area.
We've got very little time, Harley, but what do you put in place if we are going to see more tariffs? How will that affect your business?
I mean, we've been operating for 20 years. I've been at Shopify for more than a third of my life, and we've seen a lot of administrations come in. Our job is not to try to predict exactly what's going to happen, what every administration is going to do. Our job is to arm our merchants with everything they need to be successful, no matter what comes out. And like I said, we've been doing that for more than 2 decades. We will continue to do that.
Harley Finkelstein, great to have you, Shopify president. Thank you. Now let's turn our attention to this year's Singles Day haul. It appears to be one of the biggest yet, all according to China's biggest e-commerce platforms like Alibaba, like JD.com, which all issued a raft of numbers showing robust growth, showing the country's biggest annual online shopping gala. But there are some selective disclosures going on from some of the tech leaders, and investors are actually concerned they're getting a kind of incomplete picture. Henry Wren has got the inside track for us. What are we worried about, Henry?
So yeah, this year marks the 15th anniversary of Singles Day, but unlike the previous years, where when you have those e-commerce platforms throwing out huge watching parties, disclosing sales data on hour-to-hour basis, these days these companies just disclose data on selective basis. For example, JD.com said that shoppers on its platform increased by 20%, while premium shoppers on Alibaba's Tmall platforms, they increased 50%. But as you said, these are all selective disclosures. Alternative data, for example, third-party providers said GMVs on e-commerce platforms during the period increased by 27% year over year. But we also have to take that with a pinch of salt as well, because these days e-commerce platforms are elongating their Double 11 discount period to almost a month, which is the longest in the 15 years of history. So all those kind of data need to be taken with a pinch of salt. And as we know, the macro is still weak in China, the housing market is still in the downturn, and consumers are still cautious.
So is just Singles Day losing significance?
Yeah, you can say that, because the Singles Day has been running for almost a month, and it came actually right after the National Day holiday, which is in early October. So you can say that those two events are just packed up along with each other. But also in the meantime, we are having other shopping events along the year as well. For example, 618 is another event that people are watching about. So we can say that there are indeed a shopper fatigue at this period of time, because there are so many discounts going on all over the year.
Henry Wren, we so appreciate it. Meanwhile, let's turn our attention to Snap for a moment. Shares, as you'll see, under pressure by more than 4%. Reports that Trump is expected to try and halt a TikTok ban, that being reported by the Washington Post, affecting some of those social media companies today. This is Bloomberg Technology. Take a quick look at Tesla shares, because the stock is giving away a little bit of its past gains. Boy, has it run up more than 40% since Trump's election. The market cap in excess of $1 trillion once again. But it's not just Tesla that we're focusing on. The market love for Elon Musk has been focusing elsewhere as well. Supporters buying up speculative assets linked to the billionaire, like Dogecoin, like closed-end fund Destiny Tech 100, with many retail investors hoping to profit from Donald Trump's re-election. Bloomberg's Denitsa Tegova is here with the inside track of what have the retail community and others been buying up.
Yeah, we've really seen incredible euphoria among retail traders. Just to zoom out and look at retail trader activity, we're seeing a record retail trader activity in options. And retail traders go to options when they want to chase that upside, when they want to chase the gains we're seeing in Tesla. There is, for example, a leveraged Tesla ETF, which allows investors to get 2 times the gains of Tesla. It's been one of the most traded tools. So investors are really looking to double their bets, go all in. Of course, looking at Destiny 100, the gains have been incredible. We had more than 280%. Today, obviously, some of the gains have faded, but we had volatility so high that trading was halted, really, really high retail activity. And of course, Dogecoin, which in the whole crypto space, we're seeing really, really strong activity. Dogecoin is actually one of the currencies that was outperforming Bitcoin. So the speculative fever there is very, very strong, of course.
Go back to the Destiny 100. What exactly is this closed-end fund, and why, when it's down 25%, we know that it's a volatile kind of product to be trading. Why do people have concerns about it?
Well, obviously, this has exposure to a lot of private market companies that are hard, illiquid vehicles.
It's exposed to SpaceX, for example. That's why people are betting on it.
38% of that fund is SpaceX. So when we see volatility in SpaceX, obviously, the moves are so big on the upside and the downside. If we go back a few months back, remember the stock was up more than 1,000%. It was really heavy volatility. And what we saw with Tesla, in a much smaller scale, is obviously the company was struggling for quite some time, and now the gains are much bigger. But of course, in a company like SpaceX that is private and it's more liquid, we see a lot more volatility. But the fund, of course, is relatively small. But we've seen similar funds who have exposure to SpaceX. For example, there is a Baron fund that was down on the year. It's now up on the year just because of that SpaceX gain. So it's incredible how much it can give in terms of performance.
Certainly has. Well, there's the leverage 3x Tesla ETP that's currently traded over in London, just down on the day. But, well, we'll get you a long-term chart on some of these things, but they have certainly been a winning formula since the election. Denitsa Tekova, great reporting. We appreciate it. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a quick check on these markets that are perhaps just taking a bit of a breather after a phenomenal run higher post the election results of Wednesday last week. We're just down by about 0.2% on the Nasdaq 100. Some of the key names that drive us lower from a points perspective is Tesla, that we've just been shining a light on after a 40% run higher since the election. Bitcoin off of those highs. At one point, it was ever so close to $90,000. We now pull back a little bit as the technical indicators show that we are overbought. We'll dig into it in a moment. But let's get on to some of the individual names, because there is some key news out. Honeywell, the best points provider on the upside when you're looking at the Nasdaq 100, at more than 3%. Elliott Investment Management, an activist investors, has built a $5 billion plus position in Honeywell, pushing for a breakup of the industrial giant that in our space is very focused on aerospace and automation. It is indeed a tech name. Nvidia up by 2.2%. We're seeing some chip strength above and beyond really for Nvidia, but not so for the rest of the market. We'll dig into why chips have been a little bit weaker in a moment. SoftBank up by more than a percentage point. We shine a light on the ADRs. It's reported its biggest quarterly profit in 2 years. Successful Indian listings are coming, but they're really trying to get those coffers back so Massa can make his next bet, which is all around AI. Remember, they took a $500 million position in OpenAI's latest fundraising round. We want to talk about Asia a little bit more as well, and a key Southeast Asian tech company reported earnings. Grab shares really rising today after the ride-hailing and delivery leader posted third-quarter earnings that exceeded expectations, boosted its earnings forecast for the year. Peter Uy joins us. He's Grab CFO. Peter, boy, it's been a long day for you. We appreciate you coming on the show. And just talk to us a little bit about what's driving the growth. We saw, 17% increase in revenue, and your forecasts are where everyone's exuberant.
Sure. We saw a very strong result in Q3, Caroline, and what we're seeing here is strong momentum in our business. We have more users on our platform than ever before, And we're seeing growth acceleration on our on-demand business, which is our mobility and deliveries business. And a lot of this is really driven by all the new product sets that we've been rolling out over the last 3 quarters. And those are really coming into action now. And also our financial services business continues to be our fastest growing segment today. So we're firing on all cylinders, strong demand as we exit the year to one of our most busiest quarter, which is the holiday season that we have here in front of us.
How much are you still having to focus in on the cost-cutting side, the focus on net profit, over and above perhaps expanding the market share as it was before, revenue growth at all costs?
Sure, yeah. So one of the things about Q3, which was a very strong set of results, was also not on the top, but also on the bottom line. So what did we see? We saw high adjusted EBITDA. We posted our highest $90 million quarter adjusted EBITDA, which is our 11th consecutive quarter EBITDA improvement. We also posted net profit for the business and also free cash flow. Now we're balancing both growth and profitability. And what we're doing is making sure also that the top of the funnel, the demand is strong. We're continuing to capture those demand, but at the same time also balancing costs and also making sure that operating leverage as the business continues to grow and continue to sustain. So we're balancing both. And you're seeing that in the third quarter of our results, where you're seeing the growth on the top, but also the profitability on the bottom.
You're balancing investors' desires as well for some returns when it comes to buybacks, for example. JP Morgan analysts saying, look, with these healthy free cash flows, maybe you could raise prospects for an increase in buyback programs. Would you do that, Peter?
We have a buyback program in place today, and it's a $500 million buyback program that we initiated in the first quarter of this year. We're about 40% all the way through there, so we still have some ways to go, and we're continuing to make good momentum in the buyback program. And what I would say is, when you think about our capital allocation framework, is 3 things. One is making sure that we're investing in the organic growth of our business, and we're seeing that coming into play with all the new products that we've been investing in. Organic growth is our highest yield, and we're going to continue to invest. When it comes to more M&A opportunities, inorganic growth, the bar is extremely high for us. Now, when we do have excess liquidity, we do want to return them to our shareholders. And you've seen our first step in doing that earlier this year by this $500 million buyback program.
Okay, JP Morgan analysts might have to hold on a little bit longer for any articulation of a raise in the next one. But what about the areas of growth? You talk about it, whether it's the financial products, but also advertising as well, coming to your platform. That's something we've seen with Uber, which is a big holder of your stock and backer of the company. How are they going? How much will we see that contribute to revenue going forward?
Sure, yeah. Advertising actually is another component of our business which is growing very fast at the moment. Actually, we're at a clip now where it's doing $200 million from an annualized basis. Now, if you look at the penetration of advertising, we're continuing to grow that as a revenue, as a percentage of our deliveries GMV. We finished the quarter at 1.6%, and we continue to grow that. And we are also up on a year-over-year basis. And one of the things that we're seeing also, it's helping our merchants. We are bringing in more merchants onto our platform also for their advertising services. It's a win-win situation. Also, we bring them traffic back to them. And we see actually the advertising to be still a lot of upside in front of us. So we're going to continue to double down on advertising, as well as also as we continue to also look to expanding our grocery delivery also. That will also bring another layer of advertising business for us.
Overall, it feels as though, as you said, you're firing on all cylinders. The share price up a lot on the day. But I just want to take a longer-term perspective here, because if you do put in a 5-year chart of your stock, it is down significantly from previous highs. And many have been trying to understand also just the extent of the growth in the market, particularly when you've got some macro headwinds for Southeast Asian consumers. Can you just tell us about where next for the next 5 years to get perhaps the share price back at those all-time highs?
Sure. If you step back on Southeast Asia, 660 million people, 50% of those population are under the age of 30. It's a smartphone-first nations. We operate in 8 countries, 700 cities, which is pretty much the whole of Southeast Asia today. And we still believe that we're still underpenetrated where Grab operates today. So if you look at our mobility business today, you're looking at high single-digit penetration. If you look at our deliveries business in the mid-teens, so there's still a long way to go. And if you look at the financial services side of the house, also 60% of Southeast Asians are underbanked or underserved. So there's a big TAM opportunity for us. And what we're seeing is, from a macro perspective and from a demand, it's not slowing down. If anything, actually, it's going through a strong momentum. And one of the components that we're seeing actually is the level of tourism in Southeast Asia. Tourism is a very critical component, a very important sector of Southeast Asian economy. And we're seeing continuing increase of tourism into all the different countries in Southeast Asia, especially coming out of the COVID days to where we are today. And we're capturing those markets. We're one of the biggest beneficiaries actually of tourism in the ride-hailing as well as in the food delivery side. So, and if you look at from a longer-term perspective, and I'll just cite a third-party report that came out last week, that over the next 5 years, the digital economy of Southeast Asia, with their mobility deliveries, will be growing at double-digit CAGR growth. So we're very bullish on Southeast Asia, and we're going to continue to double down on Southeast Asia, and we're going to, by doing actually more products and services for our customers.
You recently brought that bullishness to our CFO briefing recently, and staying up for us until midnight in your time. We appreciate it. Peter Uy, Grab CFO. Now, in other earnings, Infineon, Germany's biggest chip maker, says it sees a turnaround by the end of 2025 fiscal year. The company forecast a drop in sales in the first quarter, but then it expects a return to double-digit growth by the fourth quarter. Bloomberg spoke with Infineon's CFO a little bit earlier. Take a listen.
We see a much more pronounced seasonality in terms of inventory management by major customers. So they are managing their inventories very, very strictly towards their calendar and fiscal year end.
Infineon shares pushed higher. Let's just take a look at the rest of the market. Bloomberg's Emily Grafeo is with us. And look, is it about earnings? Is it still about the election? What are you keeping your eye on?
It looks like the market is just taking a breather because we had the biggest 5-day run-up in the S&P 500 all year that concluded yesterday. So it seems like people had really been bidding up the Trump trade kinds of stocks. Internationals were lower. Now we're seeing a little bit more strength there. Bitcoin was one of the big Trump trades that we're also seeing take a breather. So I would say overall, long-term, investors are still pretty bullish that Trump's policies will support sectors like financials, tech names, Bitcoin, but today people may be taking some profits. There was a note from Citi that said that the post-election advance in U.S. stocks could run out of steam as investors start to take profits. Investor sentiment is favorable, but valuations overall looking stretched. When I look in like some names in particular, the semiconductors are doing pretty poorly today. And what's really interesting, Caroline, is that NVIDIA is higher. NVIDIA is up over 2%, but the SOX semiconductor index is lower. There's only 4 names in that index today that are higher, and you can really see that the weakness in the semi names is pretty broad-based. NVIDIA's gains can't even carry that index into positive territory today.
Micron, one of the worst performers, and there have been some notes out from some analysts about weakness in certain areas of particularly focused on chips, and overall we're seeing the weakness in certain chips and also maybe in some of the social media companies on the back of the Washington Post report that maybe we do see a TikTok ban overturned by Trump. But then where next in terms of the next set of assets that you keep an eye on, and indeed the earnings, the fundamentals that we're likely to still get from businesses?
So I'm watching Tencent because we have those earnings coming up pretty soon. This will be one that investors are watching because a lot of people are focused on China's macroeconomic picture and how companies in China are going to fare with more stimulus. Is it working? Is it trickling down into businesses? Tencent is actually outperforming the U.S. ADRs are outperforming the S&P 500 this year. They're up about 35%. And analysts are actually saying that they expect Tencent to sustain or even accelerate the pace of revenue growth. And because they're not an e-commerce company, they might not be as exposed to any weakness in China like some of their big mega cap Chinese competitors are. But yeah, I guess I'm going to be watching that name.
Watching Disney for a little bit later in the week as well. Emily Grafeo, always great to have on the show. We appreciate it. Meanwhile, coming up, a big announcement from a major player in the field of generative AI. Writer, CEO, co-founder May Habib joins us next on a fundraising announcement. This is Bloomberg Technology. startup Writer already helps clients like L'Oreal, like Spotify, like Uber produce corporate content and has major growth plans. And today, the generative AI platform is announcing to spearhead that growth, $200 million in a Series C funding round. Here with more, Writer CEO and co-founder May Habib. Congratulations. It's a big valuation as well of $1.9 billion. What are you going to use that $200 million to do?
Oh, thank you so much, Caroline. It's wonderful to be here. We're going to use the money for the next build out of the next phase of Writer, autonomous AI systems that can plan and execute complex enterprise workflows across systems, across teams. It's that across systems part that has gotten Adobe and Salesforce and Workday really excited. We have a shared vision for how systems can talk to each other to make generative AI incredibly valuable in the enterprise.
Salesforce is actually one of your investors, and Salesforce is an area that is also focusing very much on agentic AI, building agents to make me and you and everyone far more productive when in the workplace. How are you different? How are you additive?
Yeah. So 4 years ago, right, we started working on pioneering the enterprise generative AI category. And Salesforce has been a customer for a very long time. And what we have heard from them and others over those 4 years is enterprises want complete end-to-end solutions, right? And that's our full stack platform. It's LLMs with retrieval, with observability, with guardrails, all in one package, helping them get to value faster. It's a little different than what Salesforce has built into their platform, which is very complementary.
Complementary. Where is, therefore, the competition? Is it in OpenAI, which has been doubling down on its enterprise focus?
So right now, enterprise generative AI is everything, everywhere, all at once. It is very confusing for the enterprise buyer. But this is why architecture matters, and our architecture is winning. Investors in this round have underwritten, extraordinary growth in the enterprise because we're helping folks get these mission-critical use cases to production. Folks like Mars, like Uber, like Qualcomm, like Kenvue, very powerful use cases that are accelerating their businesses.
So for those that are frustrated at the moment, when they come and they say, I don't see the return on investment in AI, I want to know where it's making us all that much more productive. Is it all about content generation? Is it all about marketing? Or where else do you expand to?
Yeah, we have helped companies cut down legal compliance reviews by more than 75%. We've helped folks increase revenue on their retail channels more than 20%. From dog food to face creams, we've helped our customers get their products to market faster. So it goes way beyond the marketing function. Any function within your company that can use a knowledge assistant, a knowledge retrieval application is benefiting from Writer.
Therefore, this money, does it get really attributed into talent at the moment? What is your blocker to scale at the pace that you want to scale at, May?
Yeah, well, we're building our next generation of LLMs, models that are trained on data that is vision, text, and action together. So our vision is enterprises that are more intelligent, more creative, faster, as a result of autonomous AI that can architect these complex workflows.
So to that point, where do you attribute this money? Like you're talking about how the real focus is going to be on the product and innovation, the large language models that underlie all of this. But is it therefore getting more salespeople out there? Is it about actually the underlying engineering talent that you need to beef up?
It is both engineering and go-to-market. On the engineering side, we are hiring AI engineers. We're hiring full-stack engineers. On the go-to-market side, sales and CS people, we take a really differentiated approach to how we partner with customers. It's incredibly intimate. And for us, the Series C is really doubling down on our engineering talent and our go-to-market talent.
May Habib, great to catch up with you. Congratulations, CEO and co-founder of Writer. Time now for Talking Tech. First up, Netflix says 70 million viewers are watching its shows with advertising every single month, nearly double the total from May. Netflix plans to make advertising a major revenue source to complement its subscriptions, though its ad business is still pretty small compared to its peers. Plus, Argentine fintech company Walla has raised $300 million from investors at a valuation of $2.75 billion. It's the latest funding haul for one of the most valuable startups in Latin America, backed by the likes of Soros Fund Management, Goldman Sachs, and Tencent. Meanwhile, sticking with VC, Donald Trump Jr. won't be joining his father's administration, instead joining 1789 Capital. It's a VC firm that invests in conservative-leaning companies, according to sources. Now, the firm was founded by Trump donor Omid Malik and has eschewed ESG principles to instead follow its own acronym, EIG, Entrepreneurship, Innovation and Growth. Now, let's just stick with the Trump impact on certain areas and indeed Elon Musk, because Threads and Blue Sky, the rival social networks that look a lot like Elon Musk's X, have seen an influx of new users since election night in the US. That's as people seek alternatives to Musk's more right-leaning platform. Let's break it all down with Bloomberg's Kurt Wagner. And Kurt, anecdotally, I've seen it on Threads, people saying I'm joining post the election, but is it happening en masse? Is there data to prove this out?
Yeah, I've seen it anecdotally as well. My feed on both services has just been full of people sort of introducing themselves, saying, hey, I'm just coming over to see, if the water's warm on this side, leaving X. But the numbers seem to suggest this is happening as well. So Blue Sky says it has added 700,000 new users in the last week. They now have 14.5 million total accounts that have been created. So 700,000 is a pretty significant jump for them in 1 week. And then Threads was the #1 free app in the U.S. App Store yesterday, the first time it had been in that #1 spot in a couple weeks since before the election. So you can see that both kind of rival services are having a little bit of a spike here, a little bit of a moment as people, as you say, are looking for an alternative to X.
How are they using things like Threads? People of many ways have seen that Meta has not wanted to be a place for political discussion. But is it therefore going to Threads, or are people behaving in a different manner?
Yeah, I think people want to go to Threads and sort of feel like they're getting that Twitter experience. But to your point, because Meta is sort of leaning away from politics, they're not getting it for the most part. And so as a result, I see a mixed kind of bag, right? I see some people who try to talk politics, they're not really getting that engagement and they're complaining about it. I know for me on election night, I remember, the day after the election, I pulled something up on Threads that I thought was brand new, election-related information. I found it was old, more than 24 hours old, right? So it's not really a great place right now for breaking news. I think for people who used Twitter and use X for news and especially political news, they're probably not going to scratch that itch over on Threads right now. But remember, this platform's not even 2 years old. It's not even a year and a half old. So it's still sort of figuring out exactly what it's for, but it does have a large audience to do that.
And briefly, it hasn't switched on ads yet. Interestingly, in Europe, we've been reporting that there's going to be less personalized ads for Meta in Europe. But there's also news that maybe we see TikTok not banned in the US. That's something that you've been talking about a lot. Is that impacting Meta and other social media companies?
It very well could, right? Because if TikTok does ultimately get banned in January, the #1 company that should benefit would be Meta, because they have a direct clone of the TikTok product with Reels in Instagram, right? So if TikTok kind of survives and continues, a lot of that upside that people might be baking into Meta stock price is going to go away. So I think it's logical to think that if Meta is down, it could be related to this idea that Trump might try to save TikTok.
Kurt Wagner, great reporting. We appreciate it. Meanwhile, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Technology.